Hello, everybody. Testing the microphone here. Leave me a comment if you can. Let me know that you can hear me. I saw Beach Life had already left one, which is awesome. Gets that out of the way of the old R comments working. So, hey, hope everybody's doing good. It's been a couple weeks. I got a major home renovation project going on right now that's coming to an end. So that's why I've sort of been away. And I'll show you guys, I'll do a video about it. It's basically outdoor, getting a new driveway, getting a new patio, some drainage in the yard. It's big to do. A lot of bulldozers, a lot of concrete trucks, and total disruption in terms of my life. So nonetheless, hope you guys are doing good and excited to hop on. Going to go through questions as always, but I thought I'd kick off with the title here, which is, which stocks are a good buy right now. Ironically, Beach Life led off with Alibaba, that I think is in that category. And frankly, a lot of the bigger FANG type stocks show some value to them right now. I did the fair value video about a week ago, and there's still value in FANG. It depends on what you think of each company, but I think most notably Amazon and most notably Google are leading the way in undervalued. I haven't looked at Facebook in a while, so we'll dig into that, but let's just jump in. So Beach Life, since you got here early, to answer your question directly, I do like Alibaba. I don't typically buy standalone Chinese stocks. However, if I were going to, this is certainly a candidate right here. All right, let me get settled. So Alibaba right off the bat, obviously this is e-commerce. You've got a P ratio under 25. EPS of $8.53, which is phenomenal. From a statistical, like what was the valuation last year and the year before, it is running basically at a historical low. You could argue that March was a little bit lower, but the PEG ratio is still strong, not as high as it once was. So lower is better. In PEG, the closer you are, or under 1 is phenomenal, but under 2 is great as well. 5x sales, that's a historical low. Price to book, under 5 is decent in today's world. We scroll down to income statement. Look at this revenue. $717 billion in the trailing 12 months. They got almost $500 billion in cash right now, and total debt $179 billion, which would obviously be bankruptcy for everybody on this channel. However, when you have enough cash to pay your debt and you're bringing in this kind of money, that's not that bad of a debt load at all. And let's see, just for fun here, Beach Life, I'm going to type it in tip ranks for you so you can get an opinion from other people. Try to squash this thing because it never seems to fit in very well. All right, 17 days ago. The rest came in last month, but you've all got buys, right? So it's not just me. My opinion probably is least important out of all these people. But you've got plus 50, plus 40, plus 60, and even the most recent, which is down a little bit, is plus 32. So yeah, I would say Alibaba's right on that board. I think the big win with Alibaba too, and I have not followed the news with them, just to be clear, over the past 60, 90 days, but it appears that whatever the Chinese government was mad at Jack Ma and company for, including that fintech play, which I forget the name of what that was, it looks like they've doled out their punishment, right? They gave him a privacy fine in the billions of dollars. They obviously slapped the wrist. That's good news. That means there's no one talking about that anymore. So this could be the time that Alibaba can get back to business and start making gains, and that's what I would expect them to do, to get out of the doghouse and start growing again. All right, so let me just show you a couple others I see. Hey, Kevin, Ismail, Abel, Joe, Neki, sorry. If I got that wrong. I'll get to your guys' questions. I appreciate you showing up. I did want to just cover a couple stocks that I think, in my opinion, are good deals right now, which, as you guys know, I'm usually very skeptical of value in the stock market over the past year. But let's see where we're at today. If you guys read your own news sources, but I'm also reading a lot about next week looking to be a down week in terms of interest and volume. So be careful. We got a little bit of a sale today, both on S&P, NASDAQ. Russell 2000's had a rough road over the past month. So the peak on Russell, which is small caps, right? Looks like, call it June, maybe 8th. And it's been sliding down. It's heading towards the lowest point of the month. So we do have some downward, I guess, pressure coming in. Now the S&P and stuff is still hitting records, so you may not notice it right off the bat, but definitely be careful. I didn't even switch this over, did I? Sorry. Here's the Russell 1 month. And you can see how it was sliding down. So sorry for that. I didn't show you the whole thing. And here's your S&P. NASDAQ down 0.73. Russell 2000 almost down 2%. We also have this curious case right here of the 10-year going down, which is like the polar opposite of what anybody would have thought this year. So remember this world where the stock market was at its peak, and then rates went all the way up to 173, 174. Look at that over the past month. I mean, that's crazy. So if you missed out on the mortgage refinance world, you may get another shot here. I think no matter what, you're looking at historical bottoms nonetheless. All right, the first stock I want to call out, because I am pretty infatuated with the chip sector right now, because I just don't see demand going away, is AMD. I do not own AMD, but I'm watching it closely. It actually took a bounce here. I don't know why I didn't do it at $75. But you've got to like where this is. I believe when I did the Morningstar video, Morningstar had them at $101 as far as fair value. So AMD is arguably on sale right now. Only thing I don't like about AMD is they're fabless. They do not make their own chips, but they are essentially a technology patent kind of company, and I think the future is bright. When we look over at the future, projections last year, $1.29, this year $2.17, next year $2.07, that didn't squeeze in very well. Next year $2.70, and 50% growth this year, 15% growth next year, and those projections are only going up. Let's see if we can get EPS trend right here. So when I say they keep going up, 90 days ago, EPS trend was 252. Now you're up to 270. We're not even at the end of the year yet. So I like AMD here as a safe value play to some degree. Let's take a look at Facebook, since I haven't actually looked at Facebook in a while. Really took off since February. PE ratio at 28, $11 a share. which is phenomenal. Switch to annual. The forward PE on Facebook. All right, so it's starting to get close to what it was at in the past. Doesn't mean it's not good. PEG ratio right on top of the 1 metric, which is where you want to be. This is a little bit higher than we've seen the past couple years. But here's the catch, I believe. Right here. Almost another 20% growth next year. This year, 34%. You're going from $10 EPS up to $13 if analysts are correct. Let me squeeze in 2022 here. Look at this. Next year, $15 in EPS. That's amazing. And Google's right on the same level, just to tell you. Let's skip ahead. Google is, that PE ratio looks a little high compared to Facebook, I would say. But look at this EPS growth, 58, 86 this year. That's ridiculous. 95, next year's growth, 17%. So I guess the bottom line here is I know that the smaller stocks are sexier, right? The names that go from $0 to $1 million. And the people have made a lot of money doing that. But I think in all the hustle and bustle for the next big thing, people are overlooking some stocks that are right in front of their freaking face that they don't think can grow anymore. They don't think Facebook can grow, AMD, all those names, but they're projected by numerous analysts to do double-digit returns next year. So if you don't like risk, there's an opportunity there, particularly if we see another market correction. Maybe next week. I have no idea. I'm not projecting next week. I know that next week we get more inflation data. Depending on what that says, it could spook people a little bit. We also know that summer is lower volume for stock trading, particularly heading into the 4th of July. So when volume comes down, things that go bad, technically, they sort of get a little bit worse because folks are like, maybe they're close to their summer vacation, right? Heading into the 4th of July. Stock market shows a little weakness. There's a lot of people that will just bail on the whole thing because they're like, well, I'm just going to go on vacation. I'm just going to go into the summer, not worry about the stock market. I'll pick it back up when school starts. So that's why I think in the summertime we could see some weakness. I know that's not majorly scientific, but it's just a gut feel I have. So, all right, off to the questions. Abel, would love your perspective on Abbott. Let's fire it up. Abbott, this is another great, I shouldn't say great before I look at it, but historically very solid healthcare play with a dividend. $110 today. Year to date, oh, this is exciting. And I say exciting because we might have something here. Peak of 128, crashed to 105 on June 1st. Maybe there was an earnings report. Now you're at 110. P ratio of 34, EPS of 319. Regardless of what the stock does, you get $1.80 per share over the course of a year. That's 1.64%. Let's see what they're projecting. So a year ago, 365. This year, 438. I don't know why that I have to shrink this in constantly, but it's annoying. 467. So you're growing on EPS. Here's probably where the problem is. Next year, 18 analysts consensus is flat to minus 1%, call it, in revenue. So something that they're doing this year and last year is not happening here. So $39 billion to just under, just about $39 billion the next year. That's what can really hold a stock down. Doesn't mean it's a bad deal, but that's what you want to look at. I also see a negative trend occurring here on EPS projections. So 505, 90 days ago. Today we're down to 438. Same thing for next year. You've knocked roughly 70 cents off the 2022 EPS target. Sorry, need a drink. Let's see what they have over at Tip Ranks. All right. Now it says strong buy here, but as you guys know, if you watch the channel, we want to get fresh updates, right? So I'm going to squeeze this in. 12 days ago, 15, 17, 17. Encouraging, something happened roughly 18 days ago, right? Because look at all these analysts that came in. I don't know the stock well enough to tell you what it was, but you have mostly buys, one hold. Even the hold has a 3.8% upside to it. The sell, ironically, has a plus 8%. So yeah, I mean, I think if you're in for dividend and you've got enough shares that dividend can matter, and you figure out why next year, 2022, why aren't we growing in 2022? The revenue should grow. You got two kinds of growth with established companies. You have EPS growth, which is profitability, right? So if you go back to, I'm trying to think of a company, a big older company, let's just pretend it's JP Morgan or something. Those are companies where the top line, the revenue, will just barely go up. Archer Daniels, something like that, right? Gigantic. Like the revenue line doesn't get a ton bigger, but the earnings per share can go up substantially. That lowers the PE and makes for a buying opportunity. On the flip side, the one that everybody is micro-analyzing these days is the revenue growth. Think of Shopify, maybe Square, anybody who's growing absurd revenue but not necessarily becoming more profitable. Shopify would be your like 120% example case there. Not likely to be profitable for many more years. You could probably throw DraftKings in that mix out of my portfolio, but the revenue is growing high, and in that situation, the price to sales should be shrinking, which could potentially make a buying opportunity, or in the case of me with DraftKings, you commit to holding it long enough to get a good return. Now with Abbott, you may have a revenue cycle that is flat for 2022, but their EPS does look to be going up slightly. And so that's good because the price that you pay today, that PE ratio will actually go down next year, even if the company isn't exploding on revenues. Perfect world, you have double digits on both sides. So I think we looked at AMD, and I think Google was there, I don't remember. They have plus double-digit earnings per share growth, plus double-digit revenue growth. That's where you want to be with a fair valuation. So you can find the double digits across both, but typically in this market, those things are like mega inflated prices, right? So I hope that helps. All right, Joe Schmo asking about Sony. I haven't looked at Sony in a while. Sony is sort of on my shit list because my son wants a PS5 and he has saved up the money. And he got some money for Christmas and he's done some odd jobs and I can't find one in Cincinnati, Ohio to save my life. And I refuse. I don't mind paying a little bit of a premium to a reseller, but I'm not paying $800. I'm not paying $900. And I'm trying to teach a lesson that eventually those price gougers get squeezed in the end. That lesson is falling on deaf ears. But here's Sony today, 1 year chart. I like Sony in terms of the PlayStation group. I like it for their digital rights, or not even digital rights, like content rights. They own stuff across music and film and such. Not sure why we're not seeing a P ratio. Sometimes Yahoo doesn't quite catch up on time. So you go to the statistics tab, by the way, if you don't see one, and they do a better job. This was updated on 6/17. Forward PE of 1792. That's a little bit higher than the historical, but I would say, it's a little down from March. Trailing PE almost doesn't matter, to be honest with you. PEG ratio fair, under 2. Price to sales fair. I like that. Let's see where their revenue's heading, are projected to head. EPS. So here's where you might see some flatness. 884 supposedly last year, 555 this year. That's a pretty decent drop. Now that EPS could drop in Sony's case for the cost of whatever they're doing on the PlayStation side. As an example, could be like an infrastructure type thing within the company. They are likely losing dollars on each PlayStation they sell. They could have to spend more money to rapidly make PlayStations, but this is a downer, absolutely for sure. Then you bounce back up to 642. Revenue growth, here's some flatness here, 0.8% from 84 to 85. Now 2023, their fiscal year must start in either March or July. 2023, you have 6.5%, so they start growing again. On the tip rank side, it says no data available. That's weird. Sometimes, and this isn't necessarily a good sign, I have to switch from the best analysts to the ones that are under 4 stars, like Martin here. Now, 22 days ago, Martin's in at $1.35, which is 42% upside. So it does look like some analysts like it. I wanted to see if we get lucky. Let's see if we can pull a fair value out of this thing. There's Morningstar. Fair value at 111. So if you bought today, all intensive purposes, this was dated May 5th, you are, in Morningstar's eyes, getting a deal. And as I've said in my recent videos, look, Morningstar isn't the Bible, and I've talked about them a lot in the past week because I found that free library access. Go look under my channel under like free stock tools or something. So since I had that free library access, I've been looking at it a lot more. And what I love about it from a guy that's always a little risk averse, I like how they're sort of conservative, right? Because you got stock market analysts, YouTubers, Twitter folks who are always going to tell you that stocks are going to go to the moon. I do not do that. Thus the reason very few people watch my channel. But Morningstar comes in with a much more conservative view and actually challenges the business in their analysis. They're like, well, what could reasonably happen here? What's the reasonable moat? What's the reasonable bull case? And I like to see that opinion. It doesn't mean that they are God. It just means like, hey, I want to look at what somebody who's not promising their followers a stock to the moon, I want to see what they say. Morningstar has a long track record of reputability in the industry, and most of that reputation is based on that sort of factual, honest outlook. So that's why you hear about them with me a lot. All right, Nikkei, I hope I said it right. Nikkei's doing home renovation too. If you accept not having time in your life, exactly. I'm very hopeful that next week, the last part of my project, they have to put sod down, which will of course be, a little bit of a shit show for me to keep it watered and whatnot in the middle of summer. But once that's done, I'm done, and we can get outside and enjoy it a little bit. Amvos, appreciate your thoughts on copper. Is it a good time? Appreciate your review of FCX. I almost don't want to talk about copper because I don't do anything with it, and I don't think it's fair to even pretend that I do something with it. So here's the one thing I know about copper, and that is we're going to need more of it in the future than we need it today. And if I was going to play it, I don't see copper futures. Copper right here. All right, so copper futures look like they're going down. So the only thing I can tell you about this from my experience is that would be you can expect weakness in copper pricing just because the future price of copper, in this case, July 21st, is down relatively significantly, in terms of copper anyway, from its 478 high this year on May 11th. So the little bit I know is I would say if you believe copper is going to go back up, you would buy the dip here conceivably. This is the same price that was offered on April 14th. And if you expect it to go here, then you would have something. What I would probably be more likely to do in my situation is invest in Albemarle right here. Let's see if they have copper. So Albemarle is a huge mining company, huge. And you get a dividend, not a lot, but 0.95%. Looks like PE ratio is a little high right now. Scrolling down here, squeeze it in a little bit. Guess that's the max. I want to see if they have copper, which is in all this goofy stuff here. Really hard for me to read all that and display it to you at the same time. Let's just see if it shows up on this page real quick. Nope. They are not in copper, so that was a waste of all of our time. Sorry about that. But anyway, I'm going to stop there and just say that's the most I know about copper. You did add FCX to your request, which I'll type in. Okay. So you're going, and so I do like this, technically, because you brought up a miner, and you obviously have more experience in the market with copper, which, by the way, that P ratio is lower. Now, I'm going off memory here. I think we said copper price of April 14 was the last time that copper futures traded this way. So you're at 36 on April 14th. You're at 35.07 today. Again, you have to hope that copper is going to go up. Does copper go up over time? I think it does. But I don't do a lot with precious metals, so I'm sorry. I will say that copper, my understanding of it is it plays a very important role in, it's sort of like lithium. So in the new age world of technology, it plays an important role. Not something I typically get into, though. Hopefully that's a little bit of help. Screw College likes Nintendo and Sony. Nintendo is always surprising to me because they don't, like, I look at it having a teenager and a young son who are just all about PlayStation, My youngest son, though, he does have the Switch, and those games are fun, especially if you're a dad and you're like, you know, I can't get into Call of Duty, I just get annihilated, so you start playing the stupid like Mario Party and whatever. They do a good job, but I always feel like, why are they always a year behind on video game like technology, right? It just feels like they always are. But to their credit, I think the Switches are wildly popular and they continue to sell above price. Let's look at, just for fun here, Nintendo. Can you buy Nintendo Switches right now? Nintendo. So go on here. I always, by the way, click on this shopping thing. Maybe not. Okay, so I'm in America and none of the big stores are listed here. So I'm guessing you can't get it at Target, etc., which is where, like in a normal year, I would go for something like that. So yeah, maybe Nintendo is still on fire. By the way, we just dipped under 1% in the NASDAQ. So very interesting. If you're looking for, trying to scan the wire here, see if anything's fallen notably. You guys can't see it because it's over here on my watch list. Can I squeeze this in? See, it won't squeeze in the little prices, so I'll just bring it down. But yeah, thanks, Screw College. Good call on Nintendo. Sven says Facebook clearly over-evaluated. Big money say the overpriced stock. I guess I kind of disagree, to be honest with you, but I know where you're coming from. I think that my take on Facebook is we're probably underestimating the new worlds that they play in. Zuckerberg in particular on virtual reality, I think is a big threat over the long haul. I think that now we've gotten through the WhatsApp privacy terms and conditions. I feel like WhatsApp is back up in the future. So, you know, everybody has their opinion, so I certainly don't disrespect that. Opinion on Nvidia from Screw College, loved it a month ago. Now, wowzers, did that thing go crazy. Loved it a month ago at $5.99. 1 month ago we were at, oh God, $5.46. $4.63 on March 8th. It's just hard to imagine that there's a ton left from right here at $7.52 in the short term, right? That it's not tough to imagine that Nvidia keeps doing good things. I would say it's a strong hold for anyone who already owns it. And I would say, you know, hope that you ever see these kind of prices in the future. They might be gone forever now since it's all the way up here. You know, for a year, this is a 1-year chart, Nvidia, you know, skyrocketed to 600 during the pandemic. Then it's sort of flat, and now rocket ship. That's probably all you're going to get out of it reasonably from a fundamental standpoint. This is like the whole next year being priced in. So in that case, I would not buy it at $7.50, but I'd be happy to hold it if I got in cheaper. All right. Raj is here. How's it going? Why Disney doesn't have much momentum? Because it ran up kind of too. I like Disney theoretically, but I think very similar to travel, Raj, it's not that it isn't a good company. It just flattened out. Like it ran ahead of itself. Here's your stock market peak about February 22nd or so. And yeah, you're going down a little bit. It'll get back there to the upward swing. But if you're going to go on historicals, here's your Disney forward PE. Why is this sidebar so annoying? Forward PE, 18, 15, 15, 21. You're at 36. Seems a little high. PEG ratio, though, is very attractive. If you bought it for less than 172, Raj, I think you're good. But you're probably married to it for a couple years to see that full growth story take off. Analysts' opinions, 202 on EPS this year, just barely above that as they get the parks open. Then you take off, 502, right? Revenue this year, only 3.7% more revenue this year. For a company with big expectations, that's not a ton. But on the bright side, 26% next year. So hang in there, Raj. I think your day's coming, but I think you unfortunately just have a stock that hit its hoopla early. Go to every travel stock in the NASDAQ and you'll see the exact same thing. Expedia, for example. Love Expedia theoretically as far as the services that they offer. Stock's way ahead of itself. This company went into major debt last year for obvious reasons. I think VRBO is a strong competitor to Airbnb. I would buy a big dip on Expedia. I have yet to see that opportunity, though. I know you own TAP. What do you think about the current price? Current price is fair, is what I'd call it. I think that what was the name? That Topo Chico something, partnership with Coke brought it some outstanding press that we haven't seen in Tapland for a long time. It doesn't surprise me that it's come off $60. I would say that, this EPS is negative. They'll get back in positive territory this year. I think Molson Coors is doing some decent things in consumer packaged goods. I don't think that they're revolutionizing anything, but they're smart enough to try to make some more money. You see the problem, though. If they ended last year at $3.92, they may not hit that this year. Next year, they start to get back to positive growth. On the revenue side, it's just CPG, consumer packaged goods. It just doesn't grow a lot. But I don't think they've announced this yet. No. They will eventually give you a dividend, okay? It's not on here. They suspended it for the pandemic, understandably. It's not a home run stock, just to be honest with you. It's not a home run stock. I drink Coors Light, sort of mildly religiously, and we only do tap or Molson Coors products in my house when it comes to alcoholic, beer type stuff. So Blue Moon, Labatt's, they have Vizzy. I think it's Vizzy is their seltzer. So if we have a party, we serve that as the seltzer. I'm perfectly fine owning TAP as my consumer packaged goods play, but I don't expect the moon out of it. I expect it to remain relatively stable. I bought it way too high in 2018. Pandemic hit, and I bought it in the 30s, and I sold my expensive shares. So I took a loss for those that I put on my last tax return, which was great. So I got to start over with TAP from 30 some odd dollars up to 54 today. Eventually you'll get a dividend. It's better than a savings account. It's relatively low risk. That's how you have to look at it. All right, by LKCO. Don't know that one. Let's check it out. Lu Kung. Well, this is Penny World. and there's nothing wrong with penny stock world, but I just don't do it on this channel. And I say to everyone who does, in a world like this, you are playing press release slash social media momentum. There's nothing wrong with that, but just be careful. If I owned LKCO, and if I bought it on May 17th at $1.16, I would probably be getting to the point where I'd have to think about selling it, because I would have almost doubled my money. So that's my take. But I know nothing about what the company does or the long-term future for it. 9 times out of 10, stocks under $9 are very early for long-term investors. Most long-term investors like me are going to want to see a ray of hope for EPS. And if they don't have EPS, then they need to be growing plus 20% on the top line, which is revenue, and have at least a price to sales ratio that's in the stratosphere, which in today's day is more like 20 or less. All right, about time Enphase back. I saw the Enphase bounce back. I was getting ready to get back in, and then it went to 160, which I thought was odd. Now, 160 isn't a bad price for Enphase, because I paid in the 200s. Don't forget I sold it and took the loss that I'll write off later. I'll have a whole video when I get back in it. But there's still some solar complexities out there that I think it's running up too high at 160. I would like to go into the 140s, potentially 130s. Here's your EPS this year, $2. That gives you a P ratio forward in the 80s. And next year's good, man, but it's not like take the world over good. 268, great sales growth. Some of this is because they sold nothing during the pandemic, but next year, 35%. If you're playing in solar stocks, my 2 cents is that all of them have called out semiconductor shortages as a potential issue. Demand is there. Demand is very strong in solar. I think everybody knows that. We've got the Biden commitment to the tax credits that go to solar, so that is perfect. What sucks is there is more demand than there is supply. So you're technically losing sales if you're Enphase or anyone else who's playing in solar. So with that in mind, it would not surprise me to see another 1 or 2 disappointing earnings reports, and that's when you would probably get back in. For me and Enphase, I'm excited to get back in. It was not in, when it was in the 130s, I was still in my wash sale period, so I could not buy it. I became eligible for that approximately last week, and of course it went up right then and there, so I am waiting for a good opportunity. I already got burned once on a high price. The same goes for Unity Software. I'm excited to get back in, but now that one's over 100. All right, DocuSign. And I'm also saying hi to Jordan. Jordan, who's in the chat at the bottom, is entirely responsible for this one, what's it called, for this episode here today, because he left a comment about live streams. I had sort of forgotten about him. I had a lot going on. So Jordan, this is for you. And because of that, I'm skipping ahead. How do you feel about ChargePoint or Blink? I'll get everybody else in a second. ChargePoint, I was looking at it today because somebody else is about to go live. Let me bring this over. Just to be fair, I'm not as bullish on electric vehicles. I believe electric vehicles are the future. I don't think that they permeate as quickly as most people do. But what about ChargePoint? So you're off your high of 44 down to 33. Let's see what these guys are doing. I'm not expecting any sort of EPS growth on a company, that's still new here. This is the game right here. Plus 40% sales this year, plus 67% next year. Obviously, you also have the Biden infrastructure. I think there is a game here. I'd have to go more towards their earnings report due to the lack of statistics. Somewhere I need at least a price to sales. Not sure if I can get that out of ChargePoint, but I don't mind the play as long as you know with ChargePoint that there's no way in hell they're going to be the only one doing this. And there's a SPAC out there right now for a company that does similar. So you will have to study it. I'm not saying it's a bad stock, but you will have to study it in terms of government contracts, stuff like that for their infrastructure. I bet you could talk yourself into ChargePoint or out of it by their earnings reports by themselves, right? Where in the earnings reports they talk about contracts that are signed and ready to build, that's what you're looking for. In terms of Blink, so this is another company now that does the same thing. And I don't know the differences. So Jordan is likely the guy who can tell you why Blink's better than ChargePoint. They have very similar prices, 38. They have very similar dips and bounce back. Let's see who's growing revenue faster. Looks to me like it is Blink. 97% this year, 109 next year. They're saying 25 million. Can't remember what ChargePoint was. Sorry, I have to pause for a second here. Get this phone turned off. Sorry guys, I'm still here. I'm texting random questions. All right, so Blink versus ChargePoint. I wanted to see who had more revenue. So we know Blink is anticipating 25 million. ChargePoint, though, a lot more, 344 million. This is a tough one. I'll type it into tip ranks here. I actually have this little stock comparison, which I use sometimes. So Blink and here we go. All right, now this is just high level. We have similar prices. Blink, the consensus is downside. ChargePoint consensus is upside. Market cap, similar P ratios. Let's see who the latest is. Best performing last month is a hold for Blink. And ChargePoint has some upside as of 9 days ago. Flip a coin, man, that's a tough one. Get in those earnings reports, look for government contracts, look for guaranteed sales, not only in 2021, but in 2022. Don't read it in an article because articles have opinions, just like I have opinions. Get into those earnings reports and press releases. You want to see things like, I don't know, Los Angeles signs contract with ChargePoint for 25 charging stations in the metro area. Something like that. That's what you're looking for. Compare those two companies. All right, I'm going to scroll back up to the people I missed, but we had to call a shout out to Jordan. DocuSign to the moon, maybe. DocuSign under 200, that was a good opportunity. I was looking at it there. I think DocuSign long-term is great. I love the platform. I think they're doing good things. Would I buy at 272 when I could have got it less than a month ago at 194? Probably not. Probably not. And that doesn't mean that it's a bad stock. It just means I feel pretty good that we'll see another one of these downward spots. Morningstar, let's see if they give them a fair value since I got it. They got a fair value of 207. All right, so they're 131% over Morningstar fair value. That doesn't necessarily matter. That's not necessarily a bad thing. It just means that there's more risk to the downside. Did you buy DocuSign last year for $100? Keep holding it. Keep holding it. It's got a lot of good things going for it. Do you want to buy a stock today? DocuSign at 271? I would argue there's better deals out there. So that's all I'm saying. Kramer recommending waiting things out. I saw that. I saw a couple headlines about wait for next week. Thanks, Kyle. And I'm in the mood to buy some stuff, but I just feel like the high growth names are just inching back up, and not a lot has changed, right? When the market went down quite a bit on May 4, I thought it went down to reasonable levels. And that's my take, particularly on the growth names. Not necessarily like sell your house and buy all stocks, but I thought like, hey, this makes sense. You know, Enphase at 130. That's more in line with fundamentals, right? Now we're starting to get back up and up and up again, and you have to be a little nervous. You know, I didn't sell anything that I owned on May 4th. I felt good for the long term that I had good companies. However, I don't think that there's a ton that's, you know, on sale right now. That's why I led off this program with FANGs and AMD as like, don't get too confused. Like, don't look for a $10 stock to go to 100 if you're in this for the long term. There's names right in front of you, particularly in the chip sector, that have opportunity. All right, Eric Lee, when you think tech, well, that's funny question. When you think tech growth stocks will bounce back, if you're talking about large market cap ones, I think we're starting to see it already. If you're talking about medium to small cap, I think they've already ticked back up to semi-ridiculous levels. I just did a thing on Upstart, which I guess is more like fintech. Great company, very intriguing story, right? Hard to get behind the 125 price point. So you're looking for pockets, I guess. What do you think about Diamondback? So I like, oh, you're saying FANG, as in Diamondback Energy. I don't know it that well. I recognize the name, but let me throw it on the screen for you. Back up. So its low was November. This EPS is just a little concerning. Let me read about them real quick. Natural gas, acquisition, exploration. Okay. So that explains this. Analysis. So if they hit this, 858, you would be at a PE ratio of almost precisely 10. And then that would go down next year. Sales, probably getting back to par. 77% looks outstanding, but it's probably back to par because next year's only a plus 10% growth. Statistically, yeah, there's your forward PE of 10. Statistically, that's cheaper than 2018. The PEG ratio is stronger. So there's some signs here that this could be decent. I think we probably missed, you know, this is probably where you wanted to be. 70, maybe on May 25th for 75. Don't know exactly what's left in it at 86 for the short term. Let's see if this is, and this is Argus. Argus is a little different. They are not the same as Morningstar. I would say that they're way more bullish. Let's see what TipRank says. Got a strong buy 9 days ago, so this is a good sign. 9 days ago at 110, that's 27% up from now. That is supposed to be a 12-month outlook, okay? So you got some people in here last month anyway that were much more bullish. Looks like that target price is coming down a little bit, but still more room to run. I would look for a red day. All right, couple more. ATY from Eric, ticker change. New IPO. Don't know it. Acuity ads. I do like ads. Digital media solutions. Must be a SPAC. Programmatic marketplace. Going to their website where, of course, they want me to accept cookies. Just trying to get a feel for what they do here. Helps you see through the clutter of programmatic, drag and drop interface, take care, competitive space, I guess, is the first thing that hits my mind. Why would you do this when there's other opportunities? That being said, you did have a high of 25. Today's price is less than, less than December-ish of last year. Nobody's covering this, which is not good. Just to let you know, maybe you found the what's it called, needle in a haystack, but pretty unlikely. Yeah, I'm not seeing it on TipRanks either. Tread with caution, I guess, is how I'll leave that one. If you have a bull case on it, if you know that they have clients that maybe are not represented in that quick outlook, then hey, you might have something. Michael, did you get a chance to look at QQQA? Yes, I did. It's a momentum play. So just to be clear, QQQ standard is my favorite ETF. So that would be QQQ. This is entirely different. If you guys don't recognize the name, it just came out in May. It's based on momentum factors formulated by these two folks. Dorsey Wright made some sort of algorithm based on momentum factors. And essentially, it's an ETF that you would buy into at a time that I gathered you would buy in at a time when the market is perhaps down and looking for a bounce back. What I couldn't gather in my short research is, does it work similar to a triple leveraged ETF? Because those can go negative quickly. So that's the only problem. Doesn't do much on their holdings, which I imagine change quite often. So that's a key thing that I don't know yet. Is it leveraged? It doesn't suggest that it's leveraged. It just says that it picks into momentum names and drops out. But know something about a leveraged ETF nonetheless, even if it doesn't apply here. When you lose 2% on a leveraged ETF, in some, if not many cases, you have to gain 4+% to get back to par, right? And I'm just doing that as a public service announcement. If you have a $10 leveraged ETF that drops to $8, the value of the securities will have to gain $4 back just to get to par. and arguably $6 to get into that sort of plus 20%-ish range. So I would not be a buyer here, but I also understand that momentum plays right now have returned explosive profits. So in regards to the question from Michael, depending on what kind of investor he is and what kind of stomach he has for risk, there could be something here, but I would need to study it more. Good chip company from Johnny Robinson. One that's sort of, for some reason, beaten down a little bit that I keep saying on here is Micron. Look up Micron. They're not in the, they're in MRAM, or not MRAM, they're in DRAM. So they're not in the sexiest sector, but they are in this world of chip shortages and they're cranking them out and they build them. I like the prospects for Micron as a safe stock that you can purchase at a low point. Some people are saying Qualcomm, which I can understand. The only catch with Qualcomm is you are looking at the super cycle of phones. That's where you're getting your biggest lift. And I don't know how chip shortage has hit that industry, but I heard rumors that Samsung has canceled their next release due to chip shortages, so be careful with Qualcomm. All right, that is it. I'm going to hit Shilpa, which I probably said your name wrong, ISRG. I recognize it, but I don't have it memorized. Oh, Intuitive. It's a high-tech healthcare services. If I remember correctly, this is robotic surgery components. Relatively high trailing P ratio. My guess is, and you kind of see it here, hospitals are behind on restocking their floors, right? And building new things because all the elective procedures got thrown out the window during COVID. So you do have nice EPS growth here, and you have double-digit revenue growth. I would argue, looking at these historicals at a forward P of 67, I believe you will eventually see that drop to around 50, in which case you'll have the opportunity to get it cheaper. Also, this PEG ratio at 5, I would argue is suboptimal for this kind of company. That being said, they have a tremendous track record, if I remember correctly, so don't be surprised if I'm wrong. All right, guys, I got to roll. Have a great weekend. I think I just recorded today, but I haven't done it. This weekend's video will be about my 5 riskiest stocks, so please give it a like, even if you don't watch it, because it helps me out a lot. Really appreciate everybody for jumping on today. I hope you guys have a great weekend, and we'll see you next time.